On the show today, Nigeria's manufacturing and non-manufacturing slows in the first month of the new year. Kenya Capital Market Authority asks the government to issue offshore shilling debt to bolster currency. Plus, South Africa's Vodacom faces protests over callback service compensation. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. We'll begin the show here as Nigeria's manufacturing and non-manufacturing show slow down in the first month of the new year. This is according to a new report released late on Thursday by the Central Bank of Nigeria. The manufacturing PMI dropped to 58.5% in January 2019 from the 61.1% recorded in December 2018. Similarly, the non-manufacturing PMI also dropped to 60.1% in the month under review compared to 62.3% recorded the previous year. Out of the 31 subsectors surveyed for the report, 30 subsectors recorded growth, while one subsector contracted. And to the markets, and here in Nigeria, after yesterday's heavy fall, the index clawed back into the positive in the first trading day of February. At intraday, the all-share index was up 0.43%. The JSE index in South Africa was in the red at intraday. Egypt is closed today, while the Nairobi Stock Exchange ended Thursday's trading in the green, 0.70%. In the Middle East, the last trading day for the week was on Thursday. All the markets went up except Saudi, which lagged 0.28%. The Saudi Arabia stock market introduced the MSCI Tadawul 30 index. Dubai had the highest gain, up 1.14%, lifted by corporate earnings. The Abu Dhabi index rose 0.80% as Abu Dhabi Commercial Bank gained 2.6%. Qatar was also up, but marginally. In Europe, stocks were slightly higher on Friday morning as market participants monitored a flurry of corporate results and key economic reports. Well, Paul Christian Brace will bring us up to speed with all of that from the Frankfurt Stock Exchange. Good afternoon, Paul. Can we say thank God it's Friday now?
Yeah, thank God it's Friday.
All right, Paul. Germany's flagship lender, Deutsche Bank, has reported its first full-year net profit in 4 years. Meanwhile, the bank continues to face growing merger speculation and a series of uphill struggles. Now, you were at the Deutsche Bank headquarters earlier today. What were they saying?
Yeah, it was an interesting morning for me, and I saw Deutsche Bank CEO Christian Sewing giving a passionate and very confident description of his bank as a bank that, against all odds, really was able to reach its goals in 2018. The odds being, of course, market turbulences, raids at the bank, 2-day raids in the last fall, and the merger with Postbank that is still in the works, that has been for a while. The positive side on this, he was able to cut costs significantly by €1 billion in the year. He also did kick out around 6,000 employees, though, and this savings course is going to continue in 2019. However, even though the bank is focusing now on some of its core issues, so private and business banking, for example, it's also going to stay in real estate, got rid of some other things that they weren't doing so well in. Still, despite being able to cut the costs, it also lost some of its income. About 4% of income is down. And even though the company has turned a profit this year, it is a profit of 340 million euros. And that doesn't compare internationally. If we look at JP Morgan, they just made $32 billion That's around 100 times more. So that re-sparks, of course, these talks about a merger with Germany's second largest lender, Commerzbank. Journalists wanted to know about it, asked the question, and the only thing that Christian Sewing had to say is, we don't participate in this kind of speculation. So we'll have to wait there, but politics in Germany is pressing and they really want to create this national champion, so he might not have much time to deliver a real bang, a real set of confidence for investors to regain trust in the bank.
Okay, a free trade agreement between Japan and the EU entered into force today, February 1, creating world's biggest free trade zone. Tell us more about this and what's in for both the EU and Japan.
Yeah, it goes beyond just economics and business, of course. This free trade zone that will span 600 million consumers has a very interesting political side. As Jean-Claude Juncker said, it is a message to the world about the future of open and fair trade. And that, of course, is a stab across the Atlantic to the U.S., basically saying, well, you know, if you don't want to trade with us and you don't want to agree with us, we don't need you. We can deal with other people, you know. And so the EU and Japan are both profiting also politically. However, 99% of tariffs gone. That is going to spark some exchanges here. For Japan, that mainly means getting rid of agricultural tariffs. So Polish pork, Italian wine, French cheese, you're all going to see that on Japanese shelves sometime soon. And the EU wants to bring in more technology. So that's Toyota trucks, Sony TVs, and Nikon cameras. They might get a lot cheaper in Europe in the coming time. In the European Union, there's an estimate of about 1 billion euros in tariffs that will be saved through this. Some worries do remain. Consumer rights activists are fearing that high consumer protection standards in Europe might erode because they're different in Japan. And one controversial issue was left out completely, and that is investment protection, something that has brought previous trade deals to a fall here in Europe before.
Well, I guess that's a subtle message to Mr. Trump. Anyway, let's look at the progress on U.S.-China trade talk. China's trade delegation reportedly said Washington and Beijing had made important progress after 2 days of trade negotiations. What is the reaction of the markets where you are?
Well, here in Germany, the blue chip DAX this morning was hopeful, but then things turned around and that didn't last long because, after all, the trade talks finished without a deal. And actually, Donald Trump tweeted and said there wouldn't be a final agreement unless he had talked with Xi Jinping personally, and it might even take more than one meeting. So all of that optimism and that brief sigh of relief was gone fairly quickly. Now it's only 1 month left until $200 billion in tariffs will be put on China if nothing dramatic happens in the meantime. Of course, talks will continue, but it looks like Donald Trump is ready to just play the waiting game, and it looks like he's assuming he still has the aces up his sleeve.
For your time, Paul, it's been a wonderful week working with you. I hope to see you soonest. Enjoy the rest of the weekend.
Have a great weekend.
Sure.